Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, January 13th. Today we got Michigan's consumer sentiment at 10 a.m., half an hour after market open, and it came higher than expected. Inflation expectations came lower, and 5-year inflation came a little bit higher. Current condition and expectations came higher than expected. So basically, consumers are positive and are willing and expecting the inflation right now and in 5 years to be lower. Are the sentiment are higher than we initially expected. Is this the typical thing that we had in the past in which bad news are good news, or it's actually good news, good sentiment, good for the market? So looks like, if we check the market, looks like actually good news are good news, because we started chopping around after the open, and at 10 we got this dip that was bought up, and we started trending up until settlement and the pre-market high at 11,500 on the Nasdaq. So actually, good news are good news. Finally, if we check this trend, this was a beautiful pattern that we had initially until 11. So if we mark this as bullish, then we hit 11,540 settlement from yesterday and the pre-market high, and we started retracing, making lower lows and lower highs until VWAP 11,500 was reclaimed again after this break of pattern. Look at this beautiful flag. And now we are again trending up higher, reclaiming 11,500 on the Nasdaq. But we have mixed sentiment. Apple is barely in the green, 0.07, because all the Nasdaq was gapping down actually today. But Microsoft is minus 1%. Tesla is minus 2% after news that it was changing from neutral to sell. Amazon is the only one pushing consumer discretionary 1.65% on the day, and if we check XLY, is actually in the green. Look at this, it's quite a decent day for XLY given the circumstances. And XLY XLP, this ratio between consumer discretionary and staples, is actually holding and trying to continue higher until this pivot that we have in here. Let me check in here at 107. So financials are green after all the banks, the big banks. Let me show you. We got earnings from Citibank, from BlackRock, Morgan Stanley, and Wells Fargo. And those apart, all unless Citi Group, I think Delta, Bank of America, JP Morgan, and Wells Fargo were exceeding expectations, so we're beating earnings top and bottom. So that's why XLF is actually quite bullish on the day. We are XLF 0.11, and this is good for the economy. We will see if this is good for the markets, but actually financials are holding quite well this range and these bottoms, and this is good to avoid recession. We want banks and financial system to be in good shape. Another story will be earnings from the big stocks coming up on next month, on February. But for now, it's good to see that banks are doing well. So what is it doing well? Unfortunately, crude oil is doing quite well. It's still pushing what I was saying yesterday. Be careful, because if after core inflation going higher in services, the only thing that stopped inflation going up was energy. So if we see crude oil, natural gas, and overall XLE that is right now in the red, but still quite bullish, if we see crude oil and overall energy pushing higher, there will be no more offsetting of this energy, offsetting the inflation in other sectors. So be careful, because if we see energy spiking, we might see inflation going up again next month. Be careful with that. Crude oil is 1.59%, Look at this, quite bullish on the day. And be careful with that. Dollar is actually flat. Dollar is supporting, is at this support with this doji. Look at this monstrous, huge trend line that we had since 2021 May. And it's actually, as expected, trying to find support at this 101.11, as I mentioned yesterday. So after this big sell-off, breaking this support, and now going lower and finding this support, I expect dollar to find demand down here and maybe consolidating in 104, 105. We don't want dollar to break this pivot. So we want it down here. Yields 0.99, they are bouncing. The 2-year is 1 in the green, 1% in the green, and the 10-year is 0.84, finding this beautiful support after the pullback ahead of inflation. So yields are actually going up. If we check the terminal rates after this big rejection of 4.93 after inflation, this rejection, we are now finding support. So I don't think markets are that happy with inflation data. If you check the media, mainstream media, and all the news, a lot of people were saying, yeah, inflation has peaked. We are now in the way down. Be careful. Core inflation. As I mentioned yesterday, do your due diligence, check the CPI report and check the services. Shelter, medical services in general are going up month over month. Be careful. This is not as good as they are trying to show you. So be careful because yields are not falling down. We are at this critical level, and let's see if markets react with lower yields ahead of next interest rate hikes in February. So let's actually check what are the analyst expectations in the CME analyst tool. If 19 days, still 94, everyone is expecting 25 basis points hike until 450, 475. If we miss this one, it's going to be huge. So let's now check the terminal rates. April is showing 4.80, actually aligned with these 25 basis points. And we are going to be at that level, 4.83, also in September. And finally, in December, markets still pricing in this interest rate cut to 4.52. They expect Feds to do the first cut in December this year to support the economy and to avoid this recession. So this is what are now showing the bonds market and in general the equities market. Let's go back to the Nasdaq to take a final look. Still pushing up, higher highs, higher lows, pushing this high of days at settlement at 11,500. We have nice support. So we will see on Friday what kind of moves we have in power hour. Right now, we are still in the red on the Nasdaq due to the early downtrend that we had 1 hour before the open. We are more or less trying to recoup and finish flat. Amazon is super strong, so we will see if we can hold these levels and finish the week on a good shape. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to support my channel and receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time, and remember, the trading day is not over yet. Discipline and risk management are key for your success. Be careful with these rejections. And remember, Monday, markets are closed, reduced trading hours. So remember that this is a long weekend. Be careful with that. Lock your profits and enjoy your weekend. Stay safe, everyone, and see you on Tuesday.